The Hang Seng is up around 1.3%.
At $36.4 billion, this is the highest ever. But more importantly, as a percentage of GDP, 4.4% is a 9-year high.
At this time of the year, the liquidity in the markets is fairly muted. So, the moves can be a bit exaggerated.
Now, marketing margins in the US gas for GAIL would be around $1.1 per MMBTU versus the negative $2 that the company was making earlier because of higher gas prices. That's the first take on the index, up almost 73 points.
The US dollar rates, Fed rate peaking out sometime in 1Q, CY23. And which basically should mean that the US dollar strength should also peak out.
The United States saw the highest inflation in 40 years in 2022, while the Eurozone is seeing the highest inflation since the EU and the Euro were created.
Despite the volatile rollercoaster ride the global equity markets had, the Nifty has given a return of 5% for the Indian markets in 2022.
Expanding our existing product verticals, adding subcategories to that.
51% stake acquired for 74 crores.
Show cause notice is likely to be issued to Marion Biotech today.
It's an 18-point uptick on the Nifty.
That was the day so far. You're with us here on Closing Bell, the last closing bell of 2022, last hour of trade for 2022 as well. I'm Prashant, with me my colleague Rima. Rima, hi. And in a bit from now, Mangalam will also join us on the show. I mean, gains have been given back and it's very, very quiet out there. The Nifty is absolutely flat, 15-odd point change. Broader markets, though, are doing much better. Broader markets are doing actually quite well. And that is good to see. Watch for a close on the Nifty at least above the 18,200 level. I mean, we are again back to level watching. And 18,200 is the 38% retracement of the entire fall from the 1st of December all-time high to the Monday low. That's at about 18,199, 18,200 roughly. So it'll be good if you get a close above it. Bank Nifty is about 0.75% off the highs. So, I mean, it's not been sharp. It's been a gentle kind of slow slope downwards for most indices after the initial high that we made in the first 2 hours of trade. But within banks, I mean, PSU banks are doing quite well. As a top gaining index for the week, that's Friday to Friday, it's up almost 12%. Small caps as a space is doing well. That ties in with the broader market. Broader market is doing well, and metals as a sector is doing pretty well. Metals is a space to watch. Metals and oil and gas, etc. As we head into this new year with what's happening with China, so far oil prices have not reacted, I mean, at all, incrementally to the reopening in China. But at some point, I reckon they will. And of course, the other one is metals, which is directly related to what happens in China. Rima, hi.
Hi, last hour of 2022 trading hour. How do you feel?
Relieved.
Exhausting, right? This year has been exhausting. Reporting about it, it's truly been a volatile year. But in that, if you have to count your blessing, Indian markets have done very well. As we've been highlighting, the Indian markets have been rank outperformers, ending the year with a gain of 5% on the benchmark indices at a time when the global benchmarks like in the US and in the European markets are down 10, 20%, up to 30% coming in from the Nasdaq, and a big outperformance in the Asian market space as well. But generally, there's not much by way of notable news or price action that's taking place right now. Most traders, I guess, will be away from their desk. So let's quickly take stock of the economic data that's going to be coming out next week, right? So this is a bit of a look ahead. Over the weekend in India, we will be getting the auto sales data, but globally, you will be on Tuesday. On Monday, of course, most markets are shut, right? Right from US, UK, in the Asian market screen, you've got China, Hong Kong, Singapore, Taiwan. All these markets are shut on Monday. On the back of New Year holiday. So the meat of the economic data will only start flowing through in the second half. On Tuesday, you will be watching out for the PMI data across most of the countries. On Wednesday, very important, the minutes of the December FOMC meeting and the US ISM manufacturing data will out. On Thursday, you will get the latest Eurozone PPI reading, so inflation print, as well as the US ADP employment report, followed by the jobs report, which will come out on Friday. So these reports will provide a clear picture of how the major economies in America and Europe are faring heading into the start of the new year. So that's the look ahead when it comes to the economic data. But let's tell our viewers what we've lined up on the show today. The auto sales numbers for the month of December are out on 1st of January. We'll get you all the expectations from the auto pack. We'll get a technical expert to talk about the market setup, some trades. Vitesh Thakkar of earningswave.com will be joining in. We'll also talk market and stock-specific action with market experts Prakash Diwan and Sudeep Bandopadhyay. And we'll be joined by our Alpha Manager for the day, Aditya Sood of InCred PMS, to discuss his top portfolio bets.
Okay, how should you position yourself in the last hour of trade? Mitesh is with us. Mitesh, there's been a gentle drop-off we've seen. What would you do?
So, Prashant, I think, on the index, two things. One, the gap up got sold into, and this entire movement, which started on Monday, looks like a pullback to the trend line, which was there in force since the start of June 22. So, I think that level of trend line, the level of moving averages, 20-day moving average exponential wise, around this 18,250 zone has not been clear. So, not very positive on the index, though we haven't got a breakdown on the intraday chart, so waiting it out for that to happen to take aggressively short positions, but otherwise trading with stock specific biases. I have a sell on Godrej consumer product. That's a stock which is breaking down. So keep a stop at about 887 and look for targets of 850. And Canara Bank and Federal Bank are surprisingly very strong, but I've chosen Canara Bank as a buy call. That's a buy with a stop at about 326 for targets of 345.
Okay, those are some individual trading ideas. Let's talk about the debutante on the Dalal Strait, Elin Electronics. It's been a muted debut. The stock is currently down close to about 7%. To talk more about the company, its business model, and the key takeaways from the conversation that we had with the management, Vahishta joins us for more. Vahishta?
Hi, Reema. Thanks for that. Just like you mentioned, Electronics has had a very weak listing on the markets today. In fact, it listed at 244 rupees per share, which is to be compared with the issue price of 247 rupees. And the stock is down by about 6-7%, like you mentioned. Let me brief you a little bit about the basics of the company, which is an electronic system design and manufacturing services company for major brands of the lighting, fans, kitchen appliances in India, which includes the likes of Philips, Panasonic, Usha, Havells, Bosch, etc. Now, the key business verticals include fractional horsepower motors, and it has also ventured into the medical diagnostics cartridges. Now, the company serves under both the business models, which is the ODM as well as the OEM business model. Now, post-merger, the promoter and promoter group shareholding has fallen to 32.93%, which prior to the listing on the exchanges was at 53.98%, and post-issue the market cap comes to approximately 1,200 crores. Now, the proceeds of the IPO are expected to be utilized for repayments of their debt, for general corporate expenses, and for funding their capex at their Ghaziabad as well as the Goa plant. Now, in terms of peer comparisons, competitors like your Amber Enterprises or Dixon Technologies have much higher revenues than Elin Electronics. In fact, Elin Electronics clocked revenues of approximately 1,100 crores in FY22 with margins in the range of 7-7.5%. We hosted the management on our channel today morning, and they had said that they expect to clock 1,800 to 1,200 crores of revenues in the next 3 years. And if this is to be achieved, the company needs to grow at 22% on a year-on-year basis for the next 3 years. This is to be compared with 27% growth, which they clocked in FY22 per annum, and they clocked approximately 10% growth in FY21, though that was a COVID year, so there was a lull over there. Also, the company plans to gain from the e-retail segment in the small appliances business, and they plan to expand the BLDC electric vehicle motor business, which is an extension to their existing business. Also, backward integration has helped the company to deliver better margins than their peers. Historically, the EBITDA margins, like I mentioned, have been in the range of 7-7.5%. In fact, the company is confident of maintaining the same range, or even optimistic of improving these margin range. So all in all, a robust business model with attractive valuations, although saw a weak listing on the markets today. Back to you.
In our small appliance division, we intend to increase our sale of mixer grinders, irons, and we want to tap the e-retail business in this category because that's again another fast-growing category. Personal trimmers is another division where we want to expand, and we have very healthy orders. Motors is a major business vertical for us, so we are looking at BLDC motors, especially for the two-wheelers and three-wheeler category. That's a fast-growing category. Right now, a lot of motors are being imported, and since we are already in BLDC in ceiling fans and mixer grinders, that's a natural extension for us because the technology is already with us. So that's the EV space which we want to come out in.
That's the new target area for the company, providing motors for electric vehicle 2 and 3-wheelers. But most of the recent debuts on Dalal Street have been muted. Even Sula Vineyards, KFin Technology, and now even electronics, all of them are trading lower than their issue price. Market expert Prakash Diwan is with us. Prakash, you know about the business model. It's an contract manufacturer, so it operates on cost plus, OEM as well as original, now ODM. They're getting into design manufacture themselves. Small company, 1,100 crores of revenues, but margins higher than peers like Dixon as well as Amber. Also valuations lower. Thoughts on the stock and the prospects over the medium term?
Good afternoon, Rima. So, yeah, I do agree. It's a very distinctly carved out business model. But, a couple of things you need to put in perspective for the pricing of the stock post the listing today. One, that there was an OFS of sorts, and post this issue, I mean, there was not just OFS, there was a reduction in the holding of the promoters to an extent that's quite low. So market likes the businesses which has the majority of the promoter holding here. From that 50 plus neighborhood, it's actually come down to about 37, 38. So it's significantly lower than what a general threshold of comfort is. Secondly, when you start scaling up these businesses, you can't manage to maintain these kind of margins on a bigger scale. So it's unfair to compare it with Amber and Dixon for the simple reason that they have far bigger books that they kind of work towards, and that's precisely the concern that the market would have, that if they were to scale up, can the EBITDA margins remain as strong? And if they were to remain strong, how much scale up can happen? So those chicken and egg questions will probably confound the market for some time. What you do in such cases, it's best to let a couple of quarters, the company run into a few quarters, see what the dialogue is with you as investors, see what articulation they make for the plans that are set out in the IPO, where a lot can change in that. But otherwise, I don't see any reason why you need to kind of jump at it or at the same time not watch it. So it's a good business, but don't be in a hurry to bite it.
Prakash, hi, good afternoon. Craftsman Auto, I think we have discussed this earlier, it's really picking up pace now, right? Almost 3,500 now. Any view on the business?
This is good afternoon, Prashant. So this is a very clearly, a business that's demonstrated its superiority in terms of what it is doing, as compared to, let's say, 6 months back when there were lots of questions, to understand the business model itself. So, hopefully Ellen gets into this stage 6 months down the line. That's exactly what I was saying. When some of these new age business, not new history on the listed space come up, it takes time to this thing. And of course, they've got these acquisitions that's helping them out. They're growing organically and inorganically both. It's a niche business that's fairly large for them to cater to, good headroom for growth. So it has quite a few of those salient. But you could argue on the valuations now that it is stretched, and things could probably look different from a risk-reward perspective and all. But it all depends on what your appetite is in terms of what you want to latch on to as a theme, as a sector. But I think the auto ancillary space will see a huge comeback of sorts. We've not seen that happen throughout 22. 23 could probably be the area where a lot of these innovations will start paying off for some of these players, and they will start getting premium valuation. So wait for that, and this definitely warrants that or merits that attention from a portfolio perspective.
Prakash, I think I remember you telling us earlier this week that for many specialty chemical companies, the orders from Europe have completely dried up. You were talking to a few dealers. Is that?
Yeah.
Am I remembering it correctly?
Yes, you're right, Rima. So in spite of the holiday season, you still have your memory working in your favor. So, it's precisely the end user industry that's kind of getting languishing in Europe because of various disruptions, whether it's energy issues, whether it's sheer logistics, or whether it's, raw material. Now, what that's leading to is precisely a drying out of that order book, and hence it kind of keeps on working backwards, and people really don't get interested in stocking or restocking. So that's one of the reasons why some of the biggest names like Aarti and all, how do you explain things coming off so drastically for the best of names, right? So that's exactly what's happened. But I think it's probably going to be re-looked at once China starts revving up. So you could probably have a little bit of a counter from there and wait for that to happen to mitigate the effect of the European slowdown.
Just to add that point, earlier today we were chatting with Balaji Amines, and they get about 58 to 60% of their revenues from pharma APIs. And they were saying the demand has dried up. So demand for this particular segment from the pharma companies is down 40% in the last 1 month. And particularly the hit is coming in from Europe. So corroborating the point that you were earlier making, that many of these specialty chemicals have been hit, particularly on account of the pharma demand from Europe being lower. And Balaji Amines quantified it as demand being down 40% for the pharma segment. And this is something even Ather was telling us, that pharma demand has been pretty muted. Prakash, do stay on. We need to slip into a very short break. Market's still quiet, off from the day's high. We are in the red now for the benchmark indices. On the other side, we'll talk more markets, and we'll also invite our alpha manager for the day, Aditya Sood of Incred PMS. Welcome back. I was just looking at the best and the worst performing IPOs, Prashant, of 2022. The best one is Adani Wilmar. It's given a return of more than 160%. The issue price for Adani Wilmar was 230. The stock is now at 620. So that's a return of 160%. And one of the worst performing IPOs has been Delivery. It was a large IPO. The issue price for Delivery was 487, and as we speak, the stock price is languishing around 330. So that's been a decline of close to about 30%. So Adani Wilmar, one of the best performing IPOs of 2022 with a return of 160%. And on the downside, it's been Delivery, down 30% from its issue price, and that's been one of the worst performing IPOs. And then there are many others, but they're smaller in size, like Hariom Pipes has been a good performer. Hariom Pipes is trading at a premium of about 130% to its issue price, but again, smaller in size. Amongst the big ones, these are the two that stand out on the way up and on the way down. Prakash, any thoughts on Adani Wilmar or Delivery from here on?
So I probably didn't get Adani Wilmar right. I thought it was expensive at the time of issuance itself, but then of course the market probably is wiser enough to figure out the valuations. On Delivery, I think at the current market price, it has started offering far better risk reward as compared to what the IPO pricing was, for sure. Not just because it's 35% down, but it also has very clearly upgraded itself into a space in the marketplace in a very significant way with superior pricing power. It's just that it's going through a phase of very stagnant growth at this point in time. But as things look up and e-commerce comes back in terms of scale for some of the larger players who have shrunk their books, things will be very different for this player, I'm sure. And then they are getting much more efficiency built into the system. So I wouldn't be surprised if it actually outperforms the peers from the IPO space, the listed space now. But it'll probably take a while. But it's definitely a long-term bet, good long-term bet, and I'm quite positive.
Prakash, you track Astra Microwave. It's a small-cap defense name.
Yes.
In August of this year, it hit a high of some 365. Then saw a sharp correction to about 250 or so. Today it's coming up some 9.5%. Any thoughts?
So, Prashant, I remember tracking this company even before defense became a buzzword of sort, and this was the only company making VSATs, in years of it's something which has been around for a long time, hasn't really done anything very spectacular. The reason why some of these companies get very difficult to invest from a long-term perspective is there's very limited float, and every time you buy into it and something goes wrong, you'll probably lose out on a lot of market value just because of that low float issue. But having said that, there's a huge trickle-down effect in the defense space that I'm observing now from companies that actually are not the mainstream frontline large businesses. They're not the government-owned HLs, BDLs, BELs of the world, but they are companies that have started seeing order flow from these larger players. So that's going to be an interesting space to watch, including this. So, you have Axicators and you have Astra Micro and you have Zentech. There's lots brewing in that space, Prashant. But a couple of quarters down the line, you will start seeing that salience emerge in the numbers. So wait for that. But it's, you probably picked up the right space if not the right stock at this point in time. But this is going to be quite an interesting area going forward in the next year.
Anything else you've picked up interesting when you do your channel checks, speak to dealers across sectors that you would like to highlight?
So I think 2023 is going to be a liberal spend, a last hurrah of sort by the government, Rima, for sure, on infrastructure, and infrastructure that matters to people. Just to kind of make sure that before they go to vote in 24, they've kind of seen the fruits of all that labor and effort by the government. And two areas that I would look at and I've started looking at very positively. One is the road infrastructure. I think it's going to go through a major significant overhaul. It also ties in with this whole objective of the government to make itself create this ease of business as far as logistics go. I mean, so there's administrative cost and physical cost. So the logistics side is actually rendering us quite uncompetitive on the export side. So that will have to be looked at. And the road infrastructure is definitely something which you could look at. And the second is going to be utilities which impact people. So water, drainage, sewage. I mean, there's lots of that out there. So you had Iron Exchange, for example, the other day talking about such robust numbers on the order book, the visibility. So you have lots of pipe companies. You mentioned Hariom Pipes. One of the reasons why it's doing so well is they're far better in terms of order execution than what they promised in the IPO. So it's not surprising that they've done so well post the IPO as well. So you have lots of these businesses that will sparkle going forward. There's lots to choose from. So I think we'll leave it for another day. But these two pockets or these two themes are probably going to be very promising.
Prakash, New Year plans?
I live in a place where there's always something or the other happening as a party around. So I really don't have the option to plan too much. But yeah, wish you guys a lovely, safe, comfortable New Year. And
which part of the world are you in right now?
Goa.
Bandra or Goa? Where?
I'm in Goa, but not Bandra anymore. I'm in Goa. Yeah.
You should
Fantastic.
Change the position. Put a glass wall behind you, and sit next to the towards the ocean.
Yeah, I mean, PCR should allow us to do outdoors shoots. I can get you to see some lovely landscape.
Absolutely. Have a wonderful end to the year and a wonderful beginning to next year. All the best, Prakash. Thank you very much.
Thank you. You guys take care. Yeah.
Thank you.
Aditya Sood is now joining us. He's portfolio manager at Incred PMS. Aditya, great to have you with us here. Thank you very much. So the markets come up nicely and it's practically kind of shaken off the correction that it saw from mid-December all the way to early this week. What's your sense? I mean, is this going to last in the near term, or are we to expect more surprises?
Well, I think so. Last year has given us enough of surprises that possibly, cumulative in our investment careers, we have not seen. I think so. We are in an environment wherein the surprises hopefully will come to an end. And the outlook seems to be like we would be in a consolidation sort of a phase for first half of the next calendar. And we hope that, risk assets fare well, as in when we see peaking of rates by the US Federal Reserve. So that is what we are hoping for, really. But in terms of markets, obviously, it is becoming more narrow in terms of moves. As we have seen, a lot of IPOs are disappointing. I think so. It is back to companies which will possibly under-promise and over-deliver. So we are in that kind of environment because essentially there is limited scope for growth surprises to come from. So essentially it is going to be to companies to perform in terms of, either the earnings growth or the guidance. That is what we hope for going forward.
Indeed. Sula Vineyards, that was one of the recent listings. Aditya, it's trading at 329. The issue price was 357. Another one, K-Fintech, 343 is where the stock is currently quoting at. The issue price was 366, and we know what happened with Elin Electronics today. That's down 7.5%. I think even Aban Holding as limited is perhaps lower than the issue price, and perhaps even Landmark Cars. So many of these recent listings which have taken place in the month of December, in the second half of December, have actually had a very poor response. Even the subscription was not great. Across the board, it was just 2-3% thereabout. There you have it. Even Landmark trading at 464, the issue price was 506. So all of them, which have debuted on Dalal Street in the last fortnight, have had a dismal performance in the early days. Aditya, afternoon. Everyone that we're speaking to seems to suggest that 2023 is going to be a tale of two halves. The first half is going to be weak, led by weak earnings coming in from the US markets, which will have a trickle-down effect across the global markets. But things will pick up in the second half of the year. But that's predicated on a Fed pivot, or the news coming out of Fed not being as bad as what the market is perhaps perceiving. What if that doesn't play out? Because right now, at least, the Fed commentary has been very consistent about rates being higher for longer. What if through 2023, the terminal rate stays above 5%? Then what happens to the performance in 2023?
I think so. In that environment, clearly the focus would be on how the central bank policy within emerging market, is held up. What we have seen over the past year is that, within the developed market central banks, if you had to, think about the Fed, and if you think about, the Bank of England, Bank of Japan, ECB as one bucket, and you think about all the emerging market central banks, including the RBI, Central Bank of Indonesia or Brazil, clearly, we have seen divergence in terms of markets. And that was predicated on the belief that, emerging market central banks have got a better understanding of, how to deal with these high inflationary periods, because they are so periodic over the last decade, in the sense that RBI, it is our core belief that the Reserve Bank of India has got a better experience of managing inflation within the emerging market central banks. So our view is that, from a Fed standpoint, Fed is critical, but clearly the focus will move within a Fed to emerging markets. And within that, we have seen, India outperforming over the past year. On top of that, we are also witnessing very sharp, derating of sectors. For example, if you look at IT, as a sector over the past year, I don't recollect a time wherein, but for the global financial crisis, the index itself was down, close to 20-odd%. Now, if you look through, there are many companies which are now trading at much reasonable valuations. We also know that, these companies have got better experience in terms of, how they can manage cost in a down cycle. More importantly, the 3-year outlook for the sector is reasonable, in the sense that still we are talking about budgets going up, digitalization as a trend. If you look at engineering, research and design within that sector, what we believe is that, it is going to be a huge winner over a 5-10 year period. So there is a short term, there is a trade-off between the short term and the long term, basically, or the medium term. That is how I would like to read it. From a standpoint of attractiveness, I think so there are many sectors which are very attractive today. For example, healthcare or IT. That is where, we are placing a lot of our incremental bets. We have just cut some exposure on the financial side over the past 2 months. So we find these spaces, interesting. So there is a lot of divergence. Even if you look at the small cap index performance in the last calendar, it is broadly down 20%. So what I have experienced as a small mid-cap manager is that, there are years wherein small and mid-caps don't do well, but there are years when you get a very large outperformance. Possibly we are headed somewhere in the next, 12 to 18 months, we are headed into that environment wherein small and mid-caps would really stand out in terms of performance.
Small and mid-caps will stand out in terms of performance. And IT and healthcare cut weight in financials over the last 2 months. These are banks, or you paid back in banks, or you had NBFCs where you've taken money?
So it has been a combination of both. We have upped our exposure on the small finance bank side. One small finance bank, wherein they have a major portion of book coming from gold loans. Obviously, gold being an asset class wherein we are reasonably constructive for next year. I think so, and that is what is getting reflected in the price action as well. We believe that rural recovery is a theme, going forward. As we get into this environment wherein food inflation hit, everybody hard in calendar year 22, what we expect going forward is that, rural recovery should help. And that is already started to reflect in commentary of FMCG companies of late. If you look at a Parle or a Dabur, they've been talking about some bit of recovery on the rural side. So we believe that is a good theme to, sort of bet on. But clearly, one has to bet on sectors which have underperformed in the last year or so. And hopefully these sectors are secular sectors. They have a very low element of cyclicality from a 3-year perspective. But obviously, there could be a year wherein IT or pharma or healthcare is down. And these are the opportunities wherein we will look to capitalize and build portfolios.
What's the extent of a recovery in the rural market? You said your chats with companies like Dabur, Parle-G seem to suggest that perhaps the rural stress has bottomed out and things are now turning around. Could you tell us more about this? What's the extent of recovery and what are they anticipating now in the next 3 months?
So if you look at, the commentary of most of these FMCG companies over last, let's say 6 months back, the narrative was more towards, inflation and whether, because everybody had to take a price hike in an environment wherein cost inflation was reasonably elevated. So the question mark was that, whether this kind of cost could be absorbed over a period of time. So we are at a very, very early stage of recovery as far as rural is concerned. On top of that, obviously, the biggest caveat here, obviously, is monsoon. And, in FY24, obviously, we are headed into election year. Normally, we have rural doing well pre-election, and that is what we have experienced over the past election cycles. So I would say that there is modest recovery, but, obviously, focus would shift towards, and it has been a year wherein, water reservoir levels are okay. Crop both on the Kharif and the Rabi side has been, okay. Just keeping our fingers crossed that we can have, a good year of monsoons. I think so that would have a reasonable impact in terms of both income levels as well as, net worth of or balance sheet repair, if I have to call it, because if gold goes up, obviously it helps to repair the rural balance sheet as well.
All right, Aditya, we'll leave it there. Thank you very much. Have a wonderful 2023. All the best for your portfolio, for your investors, to you as well. Thanks very much for joining us here on this program. Well, the market is doing nothing, right? I mean, it's a whimper, not a whimper. Wait. 94, 95 points lower. And look at the way things have corrected. Wow. We were at 3 o'clock. This is the last, 3 minutes actually. Exactly 4 minutes actually. We were at 18,200 at 257. So maybe more than 4 minutes, but just recent, right? I mean, look at that sharp cut. It's basically 2 or 3 candles, and the market has just kind of collapsed. I mean, this is a sharp, swift collapse, if there is one. I was going to take a break saying, well, the markets are absolutely flat. I mean, so a 3-4 minute look away and the market is just kind of turned around, and how this is ferocious. 100 points. Look at the Nifty Bank as well. Take a look at what that is doing. I mean, again, a very, very sharp reversal. So just before 3 o'clock is when this has started. We were at 43,200 and now at about 42,884. So again, this is a full 1% swing, basically, a little less than 1% in the last 5 minutes, 6 minutes or so now. And let's just look at the mid-cap and small-cap part of the market. If we're seeing something similar, there is something similar on the mid-cap index. The intraday will tell you that. And I think we've got the small-cap index, which is also sold off just like that, starting 3 p.m. So you can blame it on the 3 p.m.
My sense is a lot of... Yeah, I guess a lot of year-end trades are also getting closed, right? The traders would be closing their books for the year. So there would be those squaring off of positions which will take place in the last 30 minutes. And the moves get exaggerated by the thin liquidity that we are currently seeing. And remember, global markets are shut on Monday. So perhaps many traders do not want to take positions over a long global weekend in which things can turn around. But my sense is that it's a lot of closing of trades as traders and investors wrap their book for 2022, and it's made worse. The moves are looking sharper on the back of lower liquidity. Cash volumes are on the lower side, and even the F&O volumes today. But big decline seen just in a span of 4 minutes, right? That's what you counted, 4 minutes.
Yeah, a little more than 4 minutes, Rima, but the ferocity of it, right, is quite something to behold. What we'll do is we'll take a quick break here. We'll come back with Dealing Room, where Nimesh will get us a sense on, I'm assuming he'll have to make a few more phone calls with the turn that we've seen. We'll get D-Street chatter coming up next, and also the short-term technical trading ideas, BDST calls with our technical expert. Sudeep Bandyopadhyay will join us a little later after that for a quick fundamental market check. Back in 2.
Welcome back. You're watching us here on Closing Bell. It's the last trading session, and it couldn't have been made more interesting with the sudden fall that we had on the Nifty right now. Currently at, closer to the lower end of today's trading range, and it looks like selling from across the board, but more so from the Nifty Bank, which is down almost 300 points as we speak, lower on account of the weakness that we're seeing in a lot of these heavy weights. So I thought I'll walk out of my seat, walk across to where Nimesh is, and ask him what the dealing rooms are actually doing. Nimesh, whoever is working today, what explains this kind of fall?
Mangalam, I tried to speak to a couple of dealers, and the feedback is that because the volumes are low, the impact could be much higher. So maybe there could be a small basket selling, but because of lack of volumes, we've seen a vertical fall both on Nifty and on the Bank Nifty. That's overall feedback. But broadly, it's been a quiet day. Barring that last 10 minutes, it was a quiet day throughout the day. The volumes are on the lower side, which is much expected as well. I guess there is a bit of traction in the mid cap and small cap. To some extent, it also explains a bit of NAV management, so to speak. So there is a bit of traction on that side, the broader indices. But from a next week point of view, there are a few important things to track. The auto sales will be important.
Yeah.
The quarterly updates from various sectors will be important to track. And I guess that's showing up in some of the stocks as well. The likes of Titan is buzzing in trade today. The real estate stocks are buzzing in trade today. So there is a bit of preemptive buying, so to speak, in some of the stocks where there is an anticipation that the companies may report strong quarterly updates. So that's something which we'll be very, very focused on for the next week. I guess the sector which has been the sector of the year has been banking, and that's where you continue to see buying interest from larger institutions. So that continues in today's trade as well. I guess from a flow point of view, what will be important is the fresh allocations, I believe, will start, the big allocations will start in mid-Jan for emerging markets and for India. So that will set the tone as far as the FI flows are concerned. But I guess the fall what we saw today was lack of depth and a bit of maybe a small basket buying. That has led to a sharp fall in the last 10 minutes.
That explains it. Lack of depth and maybe a small basket selling could have impacted the markets so much lower. But it's the last trading day of this year. Have you managed to find some stocks that will be in focus?
Actually, I've managed to, and I think, what I want to do is maybe I want to just end this, year on a high note. So I'm hoping that one of the stocks which I'm going to mention will turn out to be true in the days to come. So the first stock in my radar today is Axis Bank. Within the financial names, it's in the green but relatively underperforming, and there is supply, constant supply coming in that particular stock from a leading FI. So again, in today's trade, the feedback is there is a small selling pressure in Axis Bank. So that's the first one. The second stock is Kotak Bank, and this is going to be interesting. Again, for this year, the stock has relatively underperformed the banking stocks, and there has been constant supply as well. Now, there is a feedback that maybe a large block is expected very soon in Kotak Bank. So that is something to track next week. And a leading FI is expected to be a likely seller. So Kotak Bank will be a very important stock to watch in the next week or next 10 days, so to speak, before the earnings season. So that's the second one. And the third one is Uniparts. Again, a new listing, just got recently listed. Marginally below the issue price, but at these levels, I believe some HNI investors have turned active buyers, and they're looking to accumulate at lower levels. So Uniparts is largely on buy flows at HNI desk, and some leading HNIs buying into that stock in the last few days. You managed to bring out 3 stocks on the last trading day. And Nimesh, you said high note, and that gave me a cue because we've been asking you, to just hum a couple of lines. I won't do that. I won't put you on the spot here. But it's the last day of the year. What's your resolution for the next year? The resolution is simple, just want to work more harder on work as well as on fitness. I think that's something which has hit me now, that I want to be more and more fitter like you guys.
Okay, work harder at work and fitness as well. You guys have any resolutions that you all have planned?
Can't top Nimesh's work harder, man.
Nimesh, you really want to work
Nimesh,
harder?
you really set a high bar.
All right. That's interesting. And of course, Nimesh will catch up on Editors Roundtable at 4:30. I'll have some questions for you. Work harder. The market is, kind of stabilizing now. 85 points. 18,105 is where we are at. And things are looking down. It all turned starting 3 o'clock, a little before 3 o'clock or so. You can see that sharp cut that we were pointing out too. This is the programming note for our weekend special Editors Roundtable, which comes in at 4:30. Just a quick sneak preview of the themes that we are touching upon. The Nifty, by the way, is in focus. It's the 7th straight year of gains in 2022. 7 years it's been up. It's never been seen before in the 32 years that we have data for the Nifty starting 1990. So what are the chances 2023 will turn out to be, eighth wonder? We'll find out. We'll tell you. We'll put some data out. We'll analyze the top performing mutual funds that performed across the large, the mid and the flexi cap categories in 2022. And of course, deep dive into some of the stocks that outperformed in those funds, which led to outsized gains.
Next, we'll also look at how Indian conglomerates have fared in calendar year 2022, and we'll put the spotlight on the top contributors and the laggards for this year. So don't forget to tune in into CNBC TV18 at 4:30 p.m. today. Okay, let's just get you a few technical trading ideas then. Markets have seen a sharp fall. Is this an opportunity to trade? Mitesh Thakkar is now with us. Mitesh, what would your BTST calls be for today?
So I have a STBT on Marico. I think that's FMCG is one sector which is kind of broken down with this fall, and 513.5 is the stop loss, while 500 is the target, and a BTST call on REC with a disclaimer that we have some positive delta positions over here. Keep a stop below 115 for targets of 119 for tomorrow, for Monday.
Okay, all right. Thanks very much, Mitesh. We'll come back to you. There's 14 minutes to go for close. Now, auto sales numbers for the month of December are due on the 1st of January. Sonia is here with the roundup of what the key expectations are across categories. Sonia, over to you.
Well, thanks a lot for that. Now, the auto sales come out on the 1st, which is a Sunday. So I don't know who's going to be tracking it that day, but I definitely will be looking at the numbers. This time around, it's a mixed bag expected. So the medium and heavy commercial vehicle segment has done quite well, and that will continue to be healthy. The problem pocket really has been the two-wheeler demand. That continues to be quite sluggish, and there's no recovery in sight, according to key brokerages. The passenger vehicle industry has also seen a bit of a slowdown and moderation in demand. In fact, discounts are on the rise, and there's very weak demand in the entry-level segment, and that's something that you should watch out for. The waiting period for entry-level cars has also come down. Now, Nomura has put out a note where they expect the PV industry, or the passenger vehicle industry growth to slow down from 25% in FY23 all the way to just 6% in FY24. That's the kind of slowdown that they expect. Rising regulatory costs as well as a discontinuation of 17 models is something that perhaps could continue to put pressure. They estimate the two-wheeler industry will grow only 10% year-on-year in FY24 versus a 20% growth that we've seen in FY23. And in terms of individual stocks, let me just go through the numbers. These are Nomura's estimates. The medium and heavy commercial vehicle sector will do well. So Ashok Leyland's numbers are expected to go up by 16%. The two-wheelers will continue to sulk. So Bajaj Auto, Royal Enfield will be under pressure, while Hero MotoCorp will barely grow 1%. Moving on, even Maruti sales are expected to fall by about 7-odd%. As I said, passenger vehicle demand has been under pressure, while M&M, both tractor and auto segment will do well. Remember, the higher end, the premium end SUVs are doing well, and hence M&M will be the big beneficiary of that, while Tata Motors finally will see a growth of just about 3-odd%. These are estimates put out by Nomura. All in all, mixed set of numbers expected from the sector in the month of December. Back to you.
Sonia, thank you very much for that. So two-wheelers weak, passenger vehicles at the entry level also fairly muted, with higher discounts seen in the month of December. Sudeep Bandyopadhyay of Indie Trade Capital is now with us on the show. Sudeep, how do you expect autos to perform going into the first half of 2023? Which ones would you bet on and why?
Well, I think autos will be under pressure, and we have seen the pressure getting built up on the passenger vehicle space very, very clearly. Commercial vehicle numbers should continue to do well, and we have seen SUV numbers, particularly high-end SUV numbers, picking up. Mahindra and Mahindra will do well, and so will Ashok Leyland. I have my views on Tata Motors that, in spite of both the segments doing well, they will start getting into a lot of challenges because of the issues in China and slowdown in Europe. So Tata Motors, I'll be careful. As far as picking up a stock is concerned, I'll be extremely careful while touching the entire automobile pack. I think there are some headwinds and we have to be very, very careful. If somebody wants to play automobiles, I think I've been recommending getting into auto ancillary. I think there are excellent opportunities even now in the auto ancillary space, and that's what needs to be looked at. And you can play the auto industry through auto ancillary. Remember, they have a solid business, whether the IC eventually wins or the EV wins, or the pace of the gain of market share by either EV or IC. You may have a problem in a specific automobile company because of their readiness or the market penetration in the EV. However, we don't foresee that in most of the auto ancillaries because they are pretty nimble and they will probably increase their component per vehicle when the transition to EV eventually happens.
Right. Sudeep, over the last couple of days, the clamor for metal stocks coming back in fashion has only increased. Today, we saw some gains at the start of the session, starting from yesterday as well. But now it's fizzled out just the way the market has seen a bit of a selling. Do you think from a first quarter of 2023 perspective, metals could be a good trade?
Mangalam, I'll be careful. We all know the metals depends on what happens in China. And it's extremely difficult to predict which way the Chinese government will react, the Chinese market will react, and Chinese economic growth will shape up. Yes, if there is demand back in China, metals demand will be back, and we will see metals outperforming. But that's a big, big question mark. And I would say that's probably a bet for a very, very aggressive investor if somebody wants to bet on metals. But from a conservative investor point of view or from an investment point of view, I think I will be cautious on metals.
Cautious on metals. Give us one idea for 23. Sudeep, hi, afternoon. One rocking pick.
Well, I think, Prashant, I definitely always look at long term and I look at fundamentally strong stocks. And, I have no doubts that infrastructure, construction, engineering, and cap goods, these are the spaces which will do well in the next fiscal. And if I have to kind of pick up a stock, it will be from this. Now, I will go for the leader, which is L&T. I believe the stars are kind of aligning for L&T right now. All the business segments are doing well. Order book is full. There is huge tailwind. Execution has improved. Their capital efficiency has improved. They have got rid of a lot of unrelated assets. Their IT assets are kind of improving the margins and performance. Even the hydrocarbon, which was a laggard, is picking up in West Asia. So overall, I think that's one stock which I'll undoubtedly recommend for investors who have 1 year plus time horizon in mind.
Okay, this is turning out to be a fairly consensus trade now and recommendation that come in this budget. We are likely to see the government's thrust on capex, on infrastructure, which will be their last budget before the pre-election year. So expect the government's spending spree perhaps to amplify in these sectors, and therefore that these sectors could do fairly well, construction and capital goods. Sudeep, thank you very much for that. Get into a short break. On the other side, we'll get you more market talk. It's the last 7 minutes of 2022's trading year. Welcome back. Down 0.5% on the benchmark indices, but the Nifty is defending 18,100. It's coming to a curtains down on 2022, the year that the Lal Street outperformed. The year when Omicron, Russia-Ukraine war, global inflation, and the subsequent many Fed rate hikes, along with massive FI selling, did not dent the sentiment on the street. Mangalam Malu has now moved over to the wall to round up the year that was on the Lal Street.
It's the last trading session of 2022. Let's rewind 2022 as we look forward to 2023 and look at what an eventful year it was for the markets. It's easy for us to forget the amount of events that we actually had to overcome during the last year. They say bull markets actually climbed walls of worry. For us, it was fortresses of worry in this year itself. Remember, at the start of this year itself, there was this big Omicron wave of COVID that plagued the nation. And just as we were recovering from that, the Russia-Ukraine war dawned upon the world, as a result of which there was a lot of uncertainty and massive global inflation. Guess what the global inflation and the COVID-led printing money led to the central bankers in the world do? They printed a lot of money, so they had to unwind all of that, and that led to a lot of rate hikes by the Fed, the highest in the history in 1 year. And then we had the European energy crisis plague somewhere around the onset of the winter. And all of this was plagued by massive FII selling, the highest that we've seen in the calendar year for our markets itself. Amidst all of this, our markets stood tall and stood resilient because of strong domestic demand, PLI schemes and China plus one factor playing for all the corporates in India, and resilient domestic flows matching FII selling to the dollar. So in light of that, we continued our streak of gains. In fact, a 7-year gaining streak. That's the highest that we've seen in the history of our Nifty trading. 5% gains for both the Nifty as well as the sensex. The last 7 years, we've compounded at over 12%. How did we fare against the world? We were standing tall out there as well. The Indian markets did a 5% gain as against the Brazilian markets, just under 5%. And we far outperformed developed markets, the likes of Dow Jones, Hang Seng, as well as NASDAQ, all of them. NASDAQ was down 33% in 2022. But we also saw weakening in the currency because of the Fed rate hikes, etc. The USD versus INR pair, the rupee depreciated by about 11%. So compare it in dollar terms, we actually had a negative return of 5.5%. There was massive FII selling, right? 2.75 lakh crores. That's the amount that FII sold in 2022 in our cash markets. The domestic institutional investors, the resilient ones, bought 2.73 lakh crores. If you just take a look at the way the FII sold, this is the highest that we've seen in a calendar year in the history of our markets. So in light of that, how did the other indices fare? The Nifty Bank was a strong outperformer, 21.5% higher. It was a weak year for the broader market, so the mid-cap index just managed to close in the green, but the Nifty small cap was down by 14%. Let's drill it down to individual sectors. It was the year of PSU banks, 70% higher on that index. The metals grew about 22% at an index level, but it was a fair amount of weakness for the pharmaceutical pack and the IT pack, one of the weakest years that we've seen for the IT pack in the last many. Individual stocks, the latest entrant onto the Nifty was its top performer as well. Adani Ent did 125% in terms of gains. ITC got the top honors board as well. A lot of jokes notwithstanding, this year was the year of ITC with a 54% gain out there. Coal India up around 52% as well. A lot of the old power companies came back. NTPC up 34%. In terms of other underperformers this year, however, the IT pack, like I said, stood out. Wipro leading the way down. 45% cuts out there. Tech Mahindra down 43% as well. Divi's Labs did not do too well either. And HCL Tech Infosys down 19 to 21 odd percent. This year was the year of PSU banks. Like I said, 144% gain for UCO Bank. Canara Bank was up around 60 odd percent as well. SBI 33%. In terms of other sectors that did well, it was the defense stocks. Mazagon Dock almost 200% higher on that one. If you invested your money at the start of the year in Garden Reach, you would have doubled it. BEL itself would have given you around 43% in terms of returns. But that's not all. We had some other mid-cap gainers as well. Indian Hotels 75% higher. TVS Motors zoomed ahead 73%. Cummins and Federal Bank up anywhere between 40 to 66% too. In terms of losers though, we had the mid-cap IT names, Mphasis, FirstSource, BirlaSoft. All of them would have halved your money. So would IEX, in fact, from the start of this year, down 44%. We were coming off a COVID year, so we saw some declines in all these diagnostic companies as well. Metropolis, Dr. Lal, falling anywhere between 40 to 60 odd percent. And this was also the year where we saw all the new age businesses decline, and how? A big cut, anywhere between 50 to 60% on Paytm, Zomato, Nykaa, PB Fintech, Delivery, even car trade was down 45%. But let's end on a positive note. There were a lot of gainers from the broader markets. Adani Power up almost 203%, NDTV 210%, It was the year where sugar did well as well. 240% for Ugar sugar, and fat was up 180%. So that's the year that was 2022, an eventful one for the markets.